Okay, let's just jump right in. When you think about the future of digital currency, the conversation is usually framed as, traditional finance versus the new crypto innovators.
Right. It's always seen as this big fight.
A high stakes, all or nothing kind of battle. But what happens when these really regulated institutions like credit unions, what happens when they stop fighting and just start exploring?
That's where it gets so interesting. It's a collision point, really. You're watching these highly traditional, very member-focused financial institutions.
The bedrock of local banking for a lot of people.
Exactly. And they're meeting this decentralized tech, but they're doing it in such a controlled, almost surgical way. It completely changes the conversation around how established institutions can begin to adopt digital assets.
And maybe more importantly, how safely they can do it.
That's the key.
So our mission for you today is a deep dive into a very specific announcement. The Arizona Financial Credit Union, that's at AZ Financial CU on social, has officially joined this cutting-edge stablecoin pilot program.
And this program is being offered by Metallicus, who are, a really significant player in the blockchain space. They're the core developers behind Metal Blockchain.
Right. So our goal for you, our listener, is to really get the mechanics of this. The basic question is, how does a traditional bank or credit union explore a field like crypto, which can be volatile, without putting its members or their deposits at any risk whatsoever?
And we're going to focus right in on the concept that makes this whole thing possible. It's what they call the zero-risk sandbox.
Yeah, and this isn't just theory, it's a real move. The news came out of San Francisco, dated December 4, 2025. It confirmed the partnership between Metallicus and AZ Financial.
And the very first thing you have to understand is the safety mechanism that's just baked right into the program.
Which is what?
It's the Metallicus Stablecoin Pilot itself.
Mm-hmm.
I mean, you can think of it as, almost like institutional grade training wheels. It's a controlled, simulated environment.
A flight simulator.
A flight simulator. That's a perfect analogy. It's a flight simulator for digital currency where you can crash the plane 1,000 times and, nobody gets hurt.
I love that because the risk mitigation is it's absolute. This pilot, it operates using what they call a crypto-free test environment. Meaning they're using simulated reserves. Simulated. And production-grade controls. So this isn't real money. Not a single cent of member deposits is flowing through this test system.
And that is the crucial safety feature. It's what allows these highly regulated institutions to even consider this kind of technology. The source material is so clear on this. It says, and I'm paraphrasing a bit, but basically absolutely no member funds or live crypto assets are used during the pilot.
Which, if you're a compliance officer at a credit union, is the only thing you need to hear to let the exploration phase even begin.
It de-risks the whole thing completely.
Of course. And that makes all the difference when you think about what credit unions are built on. It's trust. They have to be risk averse. They're built on member trust and, keeping deposits safe. That's job number one.
And you hear that sentiment echoed so clearly by Eric Givens. He's the SVP of Research and Development at Arizona Financial.
Right.
He talked about his genuine excitement, looking at innovative financial services. That's a phrase you don't always hear from a credit union exec.
But he immediately grounded that excitement in safety, didn't he? He specifically mentioned that because the pilot uses those simulated reserves, they can safely explore the technology with, and this is the key phrase, no risk to members or their deposits.
Yep, that just confirms their priority. Innovation is great, but it has to come second to safety.
It seems like a brilliant way to bridge that gap. They don't have to spend millions building their own sandbox. They can just plug into this compliant framework and start figuring out how it all works right now.
Okay, so their money is safe. We've established that. Let's get into the specifics of what they're actually testing in this sandbox. Like, what does the day-to-day of this digital money test drive actually look like?
Right. Beyond just safety, the pilot program is really structured around 3 core capabilities. It's all designed to stress test the operational side of a potential digital asset strategy.
So component 1, as we said, is just confirming the zero-risk sandbox.
The foundation.
The foundation. It confirms they're in a fully simulated environment, no actual custody of digital assets, no real money. Check.
Component 2 then gets into the functional side of things. Test payment flows. This is vital.
Right. It's not enough to just say a stablecoin works. You have to prove the plumbing holds up.
So institutions can run simulations of internal transfers, and more importantly, they can do institution-to-institution simulations on a shared test network.
And this is where the real value comes in for you, the listener. Just think about the pain points in banking right now. The slow, expensive wire transfers.
The 3-day hold on a check.
or the settlement risks when you're moving huge amounts of capital. This simulated testing lets them see if blockchain rails can actually deliver on that promise of real-time settlement and transparency.
All without the stress and risk of the traditional banking network.
Exactly. They're testing the operational speed, the technical security. They're trying to find out if it really offers a competitive advantage. Can it eliminate fraud? Can it just speed up the time it takes to credit a member's loan?
And that brings us to the third component. And this is where I think, the rubber really meets the road strategically. It's the ability for a custom-branded stablecoin issuance.
Okay, explain that.
They can securely deploy a stablecoin that's tailored specifically to their own institutional policies and operational controls. An AZ financial digital dollar, for example.
That does raise a good question for us, though. If a credit union issues an AZ financial branded stablecoin, isn't that just a centralized digital dollar with a few extra steps?
Right.
Where's the decentralized value in that for the member?
That's a fair challenge. It does seem to push things back toward institutional control. But I think the answer, at least in the context of this pilot, is all about compliance. The tech lets the credit union keep its brand, adhere to its own rules, KYC, AML, while using the security and speed of the blockchain underneath. For them, the value is owning the user experience while upgrading the pipes.
And that sounds like exactly what Frank Mazza at Metallicus is getting at. He's the director of blockchain for institutions and fintechs. He believes that credit unions have a tremendous opportunity to shape the future of stablecoin adoption.
Why them specifically?
Because they're structured to serve their members first.
Yeah.
That gives them this unique position of trust compared to, say, a giant Wall Street bank.
Yeah, that makes sense. So they're being able to implement this tech in a way that's compliant, accessible, and designed to deliver, real, tangible innovation to their members.
And you mentioned accessibility. We should definitely point out the barrier to entry here. The source notes that participation in the Stablecoin Pilot program is currently available at no cost for eligible institutions.
Which is huge. Removing the financial risk means smaller credit unions can actually compete with the big banks in this digital space.
That no-cost factor is a massive accelerator. It means the only investment is time and people, not capital. And that lowers resistance dramatically.
Okay, so we've got the Stablecoin Pilot. It's a safe, simulated entry point. But this single pilot doesn't exist in a vacuum, right? It's part of something bigger.
Exactly right. This partnership is part of a broader framework, the Metal Blockchain Banking Innovation Program.
So the pilot is the front door.
The pilot is the first step, but the innovation program is the whole roadmap. It's an initiative that lets credit unions evaluate and adopt blockchain technology more broadly, moving way beyond just stablecoins.
Because the benefits of blockchain extend far beyond just creating a digital currency?
Much more. So if they join the broader program, they get access to this whole suite of tools designed to solve common, expensive, and time-consuming banking problems using this tech.
Okay, like what? Give us some examples.
All right, let's start with fraud prevention. That's a massive drain on traditional banking. It involves all these complex internal systems, tons of human oversight.
And how does blockchain make that better?
Well, traditional fraud prevention is often reactive. You're looking at transactions after they happen. With a transparent, immutable ledger, like a blockchain, you get much better auditability right from the start.
Because you can trace it.
You can trace it. And because transactions can be confirmed and finalized almost instantly, there's just less vulnerability during that settlement window, which is where criminals so often operate today.
Makes sense. Okay, what else? The notes mentioned digital identity. That feels like a critical piece of the puzzle.
Oh, absolutely. Think about the nightmare of customer onboarding, the constant need to re-verify who you are. Digital identity tools on a blockchain can let members actually own and control their validated data.
So once you're verified by the credit union, that's it.
Potentially, yeah. That identity could streamline security and just reduce the operational friction of compliance. And that greatly improves operational efficiency across the board.
The program also introduces private blockchains. So for anyone listening who isn't familiar, this doesn't mean they're putting every member's balance on a public ledger for the world to see.
Not at all, no. A private blockchain lets a financial institution use the security and transparency of the technology internally, or maybe among a small group of partner banks. No sensitive data is ever exposed to the public internet. It's all about using the tech for internal efficiency and governance.
Got it. And finally, the program includes a compliant crypto-as-a-service platform. What does that tell you?
It tells me that Metallicus is positioning itself as a long-term, full-service partner. They're not just here for the testing phase. They're ready to help these institutions flip the switch and go from the sandbox to real-world compliant operations.
It's the full stack.
It's the full stack. They're basically saying, here's the risk-free test environment, here are all the efficiency tools, and when you're ready, here's the compliant platform to launch real products.
Which paints a picture of a company built on a really comprehensive architecture. And speaking of architecture, the source material actually gives us a look at the foundation of what Metallicus provides. They call it the 5 pillars of value that hold up their entire ecosystem.
Right, and we should spend a minute here because this is where the jargon can get a little tricky, but these 5 pillars really explain why this institutional adoption is even possible.
So let's define them. The pillars are XMD, MTL, Metal, XPR, and Loan.
Okay, let's break them down. These elements are the underlying architecture that allows them to deliver all the compliance, speed, and safety we've been talking about.
Let's start at the bottom, the base layer. We have XPR and MTL. What are these?
So XPR is the technical backbone. It's the core Metal blockchain itself. Think of it as the protocol, the layer 1 infrastructure that processes all the transactions quickly and securely. It's what provides that stability and immutability that an institution needs.
And MTL, that's usually the currency or the utility token, right?
Exactly. MTL is the native currency and the utility and governance token for the whole ecosystem. It's used to secure the network and manage governance. For an institutional user, MTL is like the operational fuel. It's the staking mechanism that ensures the integrity of the blockchain they're relying on.
Okay, so if XPR is the physical road, MTL is kind of like the gas and the toll booth that keeps the road maintained.
That's a good way to put it.
That leaves us with the 3 product layers on top, XMD, Metal, and Loan.
XMD is the critical institutional piece in this conversation. It represents the underlying digital money platform. It's the framework for issuing stablecoins and other digital assets in a compliant way. It's the engine that's running the very pilot program we've been discussing.
So XMD is the framework for tokenizing value. Then we have Metal, which sounds more like the user interface.
Precisely. Metal is all about the user experience. The digital wallet, the UI, the front-end application layer. It's how the end member, the credit union customer, actually interacts with these digital assets and services. It's how the complex tech gets packaged into an intuitive, trusted app with the credit union's brand on it.
And finally, Loan.
Loan represents the service layer that's focused on lending and other financial applications. It shows that the ecosystem isn't just about payments, it's about the full spectrum of financial services a credit union needs. Potentially using the blockchain for things like decentralized loan origination or just faster verification.
This deep dive really clarifies that the path for a traditional institution like a credit union to get into digital assets isn't reckless at all. It's highly calculated and completely risk mitigated.
I think the key takeaway here isn't the stablecoin itself. The core innovation is the creation of this simulated, compliance-forward environment that makes this kind of exploration even possible for a regulated entity.
It just removes that massive roadblock that usually stops innovation cold in finance.
Right. You can't just tell a regulated institution to jump into the deep end of crypto and figure it out, but you can invite them into a zero-risk flight simulator that's built on a proven architecture.
And that lets them build their operational controls, train their people, and develop that regulatory understanding before a single real dollar ever changes hands.
Exactly.
Which brings us to our final provocative thought for you to chew on. If the core of this pilot is the ability for institutions to issue these custom-branded stablecoins, what are the broader implications for finance?
That's a great question. Credit unions are built on community trust, on local identity, and they're using technology like the Metal blockchain to anchor that trust in the digital world.
So what happens if they start developing their own unique digital currencies, maybe a local stablecoin or one tied to specific member rewards?
How does that balance play out? Does this trend reinforce that institutional trust by giving members a modern digital tool they can use? Or does it ultimately push the boundary of decentralized tech back towards that traditional branded institutional control? It's a fascinating question about the future balance between these new decentralized systems and old-school proprietary identity.